Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the April 8th, the wonderful Wednesday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you don't have the time to call in, you can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 588 points. That's up 2 0.6%. Still nowhere near yesterday's high. So all we really have going on here, folks, remember, let's not get caught up into the numbers. Let's not even get caught up into the percentage moves out here. Let's get caught up in understanding what the market is doing, where is support, where is resistance. Today is just an inside bar. And we're up 596 points inside of the Dow. I believe it's for most of the indices, but I just have the Dow up on my screen here so we can see that it's inside bar. But I believe it's the same for the others as well. S&P is up 65 points, 2.5%. NASDAQ 100. The weak link out here up only 1.8%. Weak link 2 days in a row. Something to think about. Russell 2000 up 4%. Now, that's the lead dog out there, up 47 points. You've got the spot volatility index finally beginning to trade below the 50-day exponential moving average. So we're going to want to see where that actually closes. I believe it's $43 and a little bit of change. That's trading out at $42.83 right now, the spot VIX. Gold's up $4. No big deal there. Silver is back 23 cents, about 1.5% to the downside. Light sweet crude up 38 pennies. Natural gas back about a nickel. T-bonds down 12.30 seconds. Booking Holdings is the leader, dollar-wise, the upside, $38. Shopify up 34. AutoZone 31. Transdigm Group 28. Ring Central 27. To the downside, it would be eHealth off about $10. Baidu down 5 and change. Lending Tree off 4. San Filippo, John B. and Son Inc. off nearly 5% or 4 buckaroonies. So let's do this here. We do have a couple of questions that have come in. I see a few inside the Tiger's Den, a few by email. Let me give first, let's just give an overview of the markets, what they're doing, what we should be looking at, what we should be paying attention to. So let's start by taking a look at the S&P 500. Let's go ahead and rip this apart. Now, you're going to see a number of different lines on my chart out there. My apology, but I'll explain each of them for you. So here are the different possibilities. One, when the Dow, this is the S&P, my apologies. So when the S&P made its bottom out here, did with the Rhodes Momentum Indicator bottom, price moving lower, doing less relative energy, get the bullish reversal candle. That was on the day of March 24th out here. Price closes just over Stevie's red line. Now, there's a couple of red lines out here. So the one that doesn't stair step, the one that we're looking at, where my cursor is at, that's the daily time frame oscillator and change line. What I've done for us is I put the weekly on this as well. So the weekly, it's a weekly time frame. That, in essence, is why you see this stair step. But that allows both you and I to differentiate between the daily and the weekly. And price right now is trading between both. Let's stay with Stevie's red lines for multiple time frames out here. When the line changes color, such as on the weekly line changed from green to red. That was back around March the 26th out here. When the line changes color, there's a phenomena associated with it that tells us that we should see price and that line catch up to each other. That is where a counter trend rally, a healthy counter trend rally in a market would end. Now, that price level right now in the S&P cash index is around 28.65. It's going to change as price moves higher or price moves lower. So that may be one spot where the counter trend rally could end out here. Another spot, I've drawn in what I consider to be the proper trend channel lines out there. And those are the blue diagonal lines going from upper left down to lower right. And that may be another spot where price runs into resistance out here. Now, even though the S&P 500, the SPY, did not take out its B point with a swing point, and what that means, folks, is we do not have a confirmed A to B equals CD to the upside. This actually could be setting up what's known as a Tiger Gartley. Yeah, if you've got Tom's book, The Art of Timing the Trade out there, I don't remember the chapter and verse and paragraph, but he talks about the Tiger Gartley pattern out here and how he differentiated that from H.M. Gartley, who really didn't use volume or anything along those lines out here, just simply that the swing point was passed with lighter volume. And that's the case that we have inside of the S&P 500 right now. Now, a Gartley pattern has a one-to-one, at least a one-to-one A to B equals CD to the upside. That price target inside the S&P 500 would be 28.97. So you got 28.97 is the one-to-one. You've got 28.65 as Stevie's red line for the weekly time frame chart. We're below that with regard to the trend line resistance level out here. We're below that level. Those are the areas that I would be watching. Do I know that this is only a counter trend rally? No, I don't. Will the market prove that to us? It will. If this A to B equals CD pattern, as an example, completes out there and we see some type of bearish reversal candle, just like we saw a bullish reversal candle at the bottom, that will be the Gartley sell pattern. Now, for those of you that are aficionados of H.M. Gartley, maybe you have his book, or at least the digital version of his book out there. What you will know is what? What did H.M. say in a bear market? Sell the first what? Well, basically what he was communicating was sell the first A to B equals CD pattern. And we're definitely in a bear market. Let's not worry about that. We've gained 500 points in the S&P 500 or what have you, and now that's above less than a 20% decline. I don't even know if it is. I'm not sure where we're at right there. But we know that on the move down, we certainly hit that, and this would be that first A to B equals CD pattern to the upside inside the S&P 500. We can do the same exact thing here by taking a look at the Dow. And if we look at the Dow, we'll see those same patterns out here. And if we take a look at these patterns, so here is the Dow. Now, the Dow forms a Rhodes Momentum Indicator bottom as well. We know that the diamonds were nowhere near, the DIA was nowhere near the volume it needed when it took out its swing point. So here is a Gartley sell pattern as well that may be setting up. We can see Stevie's descending trend line channels, and we can also see the weekly level at about the 24,455. So it's possible this channel line, this trend line doesn't stop price. 24,456 to 25,116 likely will be the end of the move. But it may be sooner than we think. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We've got the Dow up 567, S&P up 65 points. Let's go out to Philadelphia and speak with John. John, thanks for calling. Thanks for holding. How are you doing this afternoon?
Steve, I'm doing very well. Thanks for taking the call.
My pleasure, as always. Let's start. There's
and
two
a hat
instruments.
tip, once again.
Go ahead. Go ahead.
Yeah, on your Apogee Perigee discovery back from 2013.
Yes.
Real-time action. I know you and I use ephemeris data that is a little bit different, maybe off by 10 minutes.
Yes.
That being the case, my perigee number for the ESM the June E mini S&P contract is 2721.
Okay.
And I just find it fascinating how the recovery today, thus far, like a half hour ago, went right to that level and stalled. Now,
yes.
It may surpass that coming up, but the fact that it went to that number precisely and then just quit rallying, at least very, very short term, I just find fascinating. So big hat tip to you, sir.
Well, thank you. And I still find it fascinating because it seems like it's a random point in time. It's not a swing point usually. And folks, if you're watching this on Tiger TV, John is referring to the perigee lunar phase. And as he said, even though our times are just a little bit different, I've got the price point at 27,1875. And you can see all these points. And you can see on the upper left-hand and the lower left-hand corner, you got the ES Mini, and then you've got the Dow. And you can see how price got up to those levels, and it has stalled. Now, the Russell 2000, John, has just busted right through that level. So not completely sure what to make of it. It's back at its highs. So you and I know that it's also at a prior resistance level. So you've got the ES, the Dow, and you've got the Russell 2000 at a resistance area out there. But I know that you called to also talk about two other instruments. The first one that I'd like to take a look at with you would be Dr. Copper. So tell us
yes,
what
sir.
you're looking at.
Very specific question for you.
Yeah. Yep.
just by way of quick background, I have been long both June net gas futures and the May copper futures here in the past days. On both of those, I booked gains yesterday on copper, today on nat gas, the June contract, not the May, the June.
Okay.
And both have pulled back and are at prices lower than where I had got out of longs. And so I'm looking with my work for a re-entry point. And in fact, I'm on the verge. Actually, I just rebought in copper an hour ago, and I'm about to in nat gas now. But I wanted to, so that's the disclosure. I'm wondering your work, if your shorter term or daily chart work is identifying any support level that we can hang our hat on as these two contracts pull back.
So on copper, there was a low that was put in during the 10 to 11 time period, so sometime between 10 and 11 o'clock, and that low was $2.24 out there. And on the hourly time frame chart, that is the very left-hand panel that we're looking at, folks. What I want you to notice is that there was a bullish structured profile that formed out there, and price made its way right back to that support level and held. So on a short-term basis, I like your re-entry into Dr. Copper, especially because on that 60-minute time frame, you've got a bullish structured profile, and now price is trading above the center of that profile, which is 225. And this would suggest that copper, the buyers within inside this quadrant here, should be able to push price up to resistance, and that would be $2.28. If we take a look at where resistance was found on the hourly time frame chart most recently, it was right up at the top of its profile. It was this morning at 1 o'clock. So maybe this is going to repeat that same pattern and get up to that 228 level. If price is able to overcome the top of that hourly box, then what that would suggest to us, John, is that price should, really get up to 229, just a tad higher, which is the top of its 4-hour bearish structured profile out there. So what this is telling us, just looking at the shorter term time frame profiles, the 4-hour and then the 1 hour, you've got the opposite of profiles, bullish on the hourly, bearish on the 4-hour chart out there. And that would suggest that we can see at that 228 area, the center of the bearish structured 4-hour time frame chart, how that was a resistance level. So I think if this gets up to that 228, and I know how you like to book a gain out there, that might be the time to do that on Dr. Copper from the short-term standpoint. If price is able to blow above those levels and really above the highs from, looks like yesterday, then we would see a run-up into about the 247 area. And it would really be more, 247 happens to be the top of the daily box.
Yeah, Steve, I like the sounds of that, sir.
Well, this is a bullish structured daily profile out here. So price is above the center of that. And in fact, the center on any pullbacks over the course of the last 2 weeks, that is where Dr. Copper has found support. And we know at the center of a box, there's both buyers and sellers, because in this case here, the center is closer to the bottom in proximity than the top. There are more buyers in that 202 to 214 level. And so its message is one that suggests price should get to 247. The caveat there, John, is that when we look to the weekly time frame chart, and this is how many of the equity future contracts, or at least the ES and the Dow, and many other ETFs that I have taken a look at, we have weekly profiles that have formed this week or last week, but this week here's what we're taking a look at for Dr. Copper, and that profile is above price, and that tells you of an overhead supply, and that would say if price gets on a counter trend rally, price should find resistance at about 2.439 out there. So that's what I see when I take a look at the profile levels for copper. It really is similar to when copper formed its bottom. It was the TD9 count. and it was a nice hammer candle that formed that. So it was the market was communicating, hey, I've got a valid bottoming pattern out here. The bar following 9 generates the bullish signal to let you know bulls are ready to try to take charge out here. And at this stage, that's what it looks like to me from a profile standpoint. His price wants to at least to continue to move higher, with 228 being your next real resistance level. Any questions?
Great. Thanks so much on that, Steve.
Sure.
Instead of consuming more of your valuable time, let me end the phone call from my end and just ask if you could, in the next minutes or by the end of the show, just give a flash of the June nat gas contract with those same charts. I'd like to just look at that data. That'd be great.
Absolutely, John. We're going into a hard break here, so these are the charts that will remain on the screen during that hard break. And this case here, the real key level for the June natural gas contract to clear is going to be 1.957. Thanks so much for calling, John, and have a wonderful Wednesday. This is Steve Rhodes with TFNN. We've got the Dow up about 576 points. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's get back to some other questions that have come in by email and through the Tigers Den here. Let's start with Mike in Canada, who wants to take a look at ticker symbol SHLX. That is Shell Midstream Partners out here, currently trading out at 990. It's trading in between its daily and its weekly profile, the bottom of which is 718, the top of which is 1238. It's below the weekly and the monthly profiles, meaning it's trading below support. And Mike is hesitant or gun shy to take a long position here. And Mike, what I can share with you from a daily time frame, it formed a nice bottom. When I say a nice bottom, two types of bottoms. One was wave number 7. That's letter G on my screen, part of the Chapman wave series. Also formed a Rhodes momentum indicator bottom. That was confirmed with the bull sash candle that occurred on March 19th. Now prices trade above Stevie's red line, but it's in between the profiles out here. It's in between its weekly and its daily oscillator unchanged line, and it's just been moving sideways. So I don't see any really gigantic benefit here. If you're, I know you've talked about the current yield, and so you've got an interest in that. If you're looking for a place to buy it, I would have to say a test of the Stevie red line area around 830. It would either be the bottom of its box, 718, slightly bullish in structure. So between 718 and 830 at the moment would be the real buy areas. Right here at 989, I don't see any benefit. Let price pull back and test a level of support if that's what you would like to move into. On a weekly time frame out here, this also formed a bottom. It was a wave, it was a TD9 count. It was bar number 8. This would suggest that if price is going to have a further counter trend rally to the upside, it should find resistance at Stevie's red line. That's currently priced at about 1336 out there. So if you really have an interest in buying it, wait for a pullback into a level of support, 718 to 830. Hope that helps you out. Thanks so much for writing in. Tom G wants to take a look at the gold contract. And so let me repopulate my short-term time frame. You're back in this long, and by this you're referring to looks like J-dust and or dust. So your question is any thoughts on gold today? So let's just go take a look at the following. Oh man, it hasn't populated. So what can Stevie do next? I want to wait for the chart to populate. I'm not sure why it's having taken. I know why it is. I've got to shut the system down once again once we get off the show here. Couple of technical difficulties lately. Really a bummer when computers don't work the way that you like them to, right? So with regard to gold, this will be. Let's just come over here and see how gold is trading in all the major currencies. Up just slightly. Flat. Oh, so so we got like divergence here, Tom. You're trading lower in terms of pound sterling, so they're not buyers at this stage. Don't appear to be buyers. Trading flat in terms of yen, slightly higher in terms of euros, and slightly higher in terms of dollars. So what you don't have here, Tom, is the type of synergy that you'd like for gold trading in one direction in all of the major currencies out there. And so this would just tell me you might not see much in the way of action Jackson as we speak. My other chart hasn't populated, so I'm going to come over here and take a look at the other short term, the hourly. Let's see hour. Let's just see where gold is trading in relationship to its hourly and 4-hour time frame profiles out here. So at this stage of the game, we've seen a pullback into support, and I really focused here, Tom, on the 4-hour time frame chart. And the level that you would need to see gold close below is 1680. You'd ideally like to see 2 closes below that from a 4-hour perspective to suggest that price is going to pull back further. So right now we have price trading above the bottom of its hourly and the bottom of its 4-hour time frame. It's above its weekly and its daily profiles out there. And you don't have gold trading lower in all the currencies. So it's going to make your J-dust and your dust trade, at least as of 134, not do much out here. So what do I see in gold at this stage? Probably the same thing you do, not much. We really don't. So I hope that that helps you out to the best that it can. And if my other gold chart here ever populates, I'll simply, if I see something, it's a 30-minute chart that's got all of my tools on it, I'll just simply bring that up and we'll go take a look at that. We had a question inside the Tiger's Den to take a look at Lowe's. So let's go take a look at L as a ticker symbol out here. And Lowe's right now trading at 37.07. That's above the top of a daily profile that formed yesterday. This profile formed below price. And so that tells us that this is a bullish message out here. However, at the same time we have a bullish message, we also have one of overhead supply. What do you mean of overhead supply? I didn't exactly get that right. Let me try to do this again. See if I can get this to tag us right here at the bottom of the gap, or 38.63, the top of the gap, however it is you want to take a look at it. So on the trading session, for example, of March 12th, 2.8 million shares that had traded hands with a gap to the downside. And by the time price got down to the lows out here on March 23rd, down at about the $30, actually below 30, right? Got down to 28.52. A lot of those people that had bought were just saying, please, they were playing the old game. Please, if this just gets back so I get to break even, I'm willing to go ahead and exit that trade. And that's what you're really seeing right now. Volume yesterday to the upside, 1.3 million shares versus the gap to the downside of nearly 3 million shares out here. Today, you're at 371,000 shares. If you're long, and I can see the reasons to be long out here, just know that what you're really seeing is a lot of this overhead resistance. If I look at the, let me pull over my other charts just to see what kind of bottom, if there's any kind of bottom pattern that was associated on the daily time frame. Yeah, there was a Rhodes momentum indicator bottom signal here inside of Lowe's. It does say that price could make its way up to resistance at about the 47.15 level. But first thing that you've got to contend with is that overhead supply at that gap area out here. If it can get through that, meaning to close above 38.63, then you've got a nice potential move to the upside. You've got a brand new bullish structured weekly profile on a move lower. Support should be at about 31.36 out there. So I hope that helps you out. In the den, I don't recall who asked me for Lowe's. There may have been some other requests inside the den. If there are, would you be kind enough to just retype those in, and then I can go immediately to that. I see another question here coming in by email. The question is, what's the next buy point for the S&P 500? If yesterday was a full moon, does that show a trend change? It could show a trend change. So I don't really know about that. You're asking for a buy point in the S&P 500. So let me just switch over to a different set of charts out here. I believe the more proper question is, where's the next sell point in the S&P 500? Where's the next sell point? But you're asking, where's the next buy point? Really? The next buy point in the S&P 500? Wow. I would have to say, to be safe in these markets, 24.79. And that number will change because that's Stevie's red line. Steve Rhodes with TFNN. We'll be back. We'll further answer that question.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the last question that had come in, and that's the last question I have inside the queue right now, was from someone asking where to buy. Where's the next buy in the S&P 500? When John from Philly had called, and so it looks like you're gonna get a retracement, or at least at this stage here. John was kind enough to refer back to my Apogee and Perigee pivot point tool out here. We can see how inside the ES Mini and inside the Dow, how prices found resistance. Each of them traded right up into it. The Nasdaq a little bit weaker, didn't make it all the way up, which would have been 82.10. So we can answer the question this way. This is a short-term tool. When price is below the Apogee or the Perigee pivot point, it's your opportunity to short the S&P 500. So intraday traders, based upon the tip that John gave to them during his call, were going ahead and they were putting on a short position at 27.1875. At least on a short-term basis out there. What you then need to do is then go to the 30-minute time frame chart to figure out, well, where is support out here? So let me pull over my other 30-minute time frame chart for you to be observing and watching what the 30-minute time frame is doing. Its level of support, which didn't completely hold, but still is a level of support at this stage of the game, is 26.41. Before price gets there, it's going to hit some other levels of support. The very first one is Stevie's green line. That's at 26.94. Below that, it's 26.88. These are the numbers I'm giving you are off of the ES Mini. So it's the only way I know how to be able to help to guide you into the S&P 500. And then below that, you're looking at 26.67 and 26.57. Now, if you are not an intraday trader, and I don't know because this individual didn't give me any kind of time frame, is it's a long-term holding? What's the time period? Here's the one thing you know for sure, with certainty. You know that you've got a key resistance level of 27.1875. That's really helpful. Now, that's helpful to both bulls and bears out there. Why is that? Because if you short the market and you see the ES Mini trade above Perigee, you're probably on the wrong side of the trade at that stage of the game out here, at least on a closing basis, on a 30-minute time frame. My preference is always 2 bars, but on an intraday time frame, you've got to have some stops in place, and you may not give it enough room out there. But you do know if you see a close above 27.1875 in the ES Mini, that's the signal to perhaps be long. It's possible that this right here, as we're on the line with each other right now, this could be the actual end of the counter trend rally. Now, if it is, there's a couple of other things that will line up with it. What would those be? Well, the one thing that would line up with it would be the spot volatility index. And what the spot volatility index would do is it would reject the 50-day exponential moving average. Well, where are we trading right now? The spot volatility index is around 4370. Where is the 50-day exponential moving average? 4347. So what we've got is we've got a test and a rejection. Now, this is a daily read out here, and so the 145 snapshot is going to look totally different. It may look totally different at 4 p.m., and I wish I had the crystal ball. Jay in the Tigers Den has the crystal ball. I don't have the crystal ball to tell you if this is it or not. But this is what you want to see. You want to see a key level of resistance. And John really gave that to you when he talked about apogee and perigee out there. And that is key. It is not a swing point. It is not a swing point. It is the exact moment in time as to where price was trading when that lunar phase, and perigee is when the moon is closest to us during the lunar phase out there. There are some very savvy people that know about that. Knew about it before I discovered it 7-8 years ago out there. There's no doubt about that. So this is in essence what we would be looking for. So at the end of today's trading session, because I hate that at the end of the day, but at the end of today's trading session, if the spot volatility is closing below its 50-day exponential moving average of 43.47, pretty good chance we're going to rally into the last trading day of the week out there. Maybe not into the close, but at least going into the trading session out there. And so really those are the areas that I would look at and observe out here. And my suggestion is that these markets are not done moving lower. That bottom from a couple weeks ago, all we're seeing is a counter trend rally. We're at war here, folks. And there's multiple wars that are going on. It would be a lot easier if this was just a biologic war, if this was just a health aspect war. It's not, is it? Because of the actions that we took, right or wrong out here, we're now going to have to deal with the economic war out there. And I don't think that that battle is even close to over. And we'll see the lows get taken out. We'll see the lows get taken out. And as far as price targets, we'll see if I can pull this up out here. If I can find my historical, I think it would be this chart right here. And it's really the Dow that we're focused on, that we're looking at. Now, what the Dow did when it moved lower, it came right back to its first level of support. And the first level of support was 19,677. We're trading now at 21,200. The next level of support on the move lower is going to be 17,063 or 15,855. I hope it's 15,855. I like 15,855, not because people are going to get, going to get trashed and hurt and stuff like that. The reason that I like 15,855, a breakout level of support on the Dow, and actually we're not at 21,200 because it's my historical chart. So this was updated, I don't know, a week ago. So let's not worry about that out there. Is because at 15,855 we had multiple tests out here. So that is a really solid move to the downside. If you see, and I could be wrong, I'm not saying I'm right, although I have real conviction behind what it is that I'm saying. Otherwise, I wouldn't say it out here. I wouldn't say it if I didn't see a number of elements to suggest that that is in fact what is going on out here. So where that caller was saying, or not caller, but written in and said, hey, where's the next buy? I think we're so close to the potential of that next top that now would be the time to, unless you're an intraday trader, to sit on your hands out here. There's going to be an economic war. Now, I will also share with you that I do believe when the market gets down into those levels, there will be a certain bottoming pattern that'll form out there. It'll show up on my charts, absolutely. And that will then be probably the next buy of a lifetime. March 29, that was the buy of a lifetime. This next one that comes in will be a buy of a lifetime. Now, economically, the war will still look just absolutely horrible. But the global flow of capital will only have one place to park. And that one place to park is going to be right here in the good old US of A. You're going to see the markets move higher. You're going to see the dollar move higher. You're going to see gold move higher. They're all going to move higher at the same time. Why is that? Because this will be the only place that global capital has confidence in. And that will be a beautiful thing. Steve Rhodes with TFNN. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So one of the things that's really missing from the current bottom being a major bottom is there's no concentration of capital anywhere. but most certainly there's no concentration of capital in the United States here. And you can do this at home. Maybe you can't do it by taking a look at how instruments are trading in multiple currencies, but you can take a look at worldwide ETFs out there. Here we're taking a look at Mexico, Hong Kong, Brazil, just emerging markets in total. We're looking at Japan, Germany, India, China, Canada, Australia, United Kingdom, the U.S. via the Dow. We're taking a look at the U.S. dollar over the same time period as we are in gold, as we are in treasury bonds out here. And this is for the exact last 12 trading sessions. Now, the Dow in U.S. dollars is up about 24%. In terms of pounds, about 15%. And it actually is the leader percentage-wise, but just by the hair on your chinny chin, because the UK is up 22% in terms of U.S. dollars. You've got Canada. So North America, we'll consider, I'd like to group Canada and the U.S. kind of in the same basket, but we don't have to. But actually, it's Canada that's leading the charge, up 27%, over 27% out there. 21% in India, Brazil 21%, Germany 19%. See, are all these with this so similar type of percentage gain, rate of change gain since the bottom? This is actually just signaling to us there is no concentration of capital anywhere. And that's not how that big ball of capital that floats around the world and tries to figure out where to park itself, when it does, you will see it park itself in that one spot, that one general area out there, which is going to be, by the way, is going to be the U.S. We see it happening now. We see it happening now how? We see it happening because everybody's trying to get U.S. dollars. One way to get U.S. dollars is go into treasury bonds. Why were T-bonds at all-time highs 3 trading sessions ago in terms of euros? 7-8 trading sessions ago in terms of yen, about the same number of trading sessions in terms of pounds. And take a look at the U.S. dollar index. Yeah, it's trading higher, and it'll continue to trade higher. When that big ball of capital lands here, folks, the U.S. dollar will go up, the stock market will go up, gold will go up. The good old U.S. of A. Make America great again. Have a terrific Wednesday, wonderful Wednesday, folks. I'll see you tomorrow. Take care.